Good morning, everyone. Welcome to the after crash party. Well, this certainly wasn't an open that I had expected, but unusual. Uh, on Friday, when we had conversation in the green room and we were all discussing what's our best guess scenarios, I think the most said, well, a gap up, which made sense, based on the bottoming tail. I kind of thought gap down because it would be a good buying opportunity, but also thought, which I wrote in the commentary of the newsletter, that a gap down in the area, more than 60% or down near the prior lows would move us probably to some choppy price action, erratic. And we've kind of gotten all of this, all even before the market opened, meaning you can see where the futures opened up yesterday at 6 o'clock Eastern, and they opened up, down, close down near the lows. And then they dipped and then came back up and sideways and then rallied all the way back up above the highs and then fell again. And now we're kind of like in no man's land, so to speak. So it's more like we've got a trading range going on here now, with this high that was put in, and we've got this low. So as we go into the day, it's like, what do we do with this? And I think I've got a greater tendency to do nothing other than look for a SPX put spread that's pretty far away from Friday's low, which probably I think is going to be a pretty reliable trade today. We'll see where the premiums are, but we'll take a look at that. Anyway, coming up to this high, at least this was attacked to some degree, where the retracement tested some resistance, and for the moment we see that the retracement, well, a little deep, but again, we're just just creating this trading range right now, which I think communicates for the most part that the majorities, which again, this makes sense, really see this extreme move to the downside as a short-term opportunity, but intermediate term, nothing's changed. Meaning this virus thing, who knows what's going to happen with it? How far will it escalate? Looking at interest rates, it's kind of a given here. The Fed is going to do something. So that's a positive. That's putting a floor under the market. So, upside, I think limited. Downside, for the most part, and right now limited. More choppy price action. So it's going to be, I would say, a day trader's market in certain stocks. I'm not so sure about the futures right here. Put spreads probably more than you could possibly consider. With the volatility jacked, premiums are up, and that's a good thing. So, we'll see how it plays out. You can see right now, futures are basically in the middle of the range here, up against a little bit of resistance there. We'll see what they do. So that's the NASDAQ futures. The S&Ps here, kind of the same thing. They gapped down and buyers stepped up and pushed it up like, man, we're going to run up to the 200 there or so. And they just kind of petered out and fell back down. And when they try to hold that little shelf there and went down to the next support. And what I'm saying, look to the left. That's where you're going to find, the buyers and sellers. And now they're coming back up to hit some resistance. And, same story, trading range here. And that's kind of a good thing in that, we don't know where today will end, but a few days hanging down here, if that's what's in the cards, will go a long way to supporting what could be a larger than normal move off of this low, having a few days down here. I covered in the advisory letter and in the video, in the ETF letter, going back to 2018 and the sizable drops, the market didn't make very big moves off of that low. It was a couple of days up, and then the selling came in and whacked it pretty good again, driving it down to the lows and a new low. And that's where the real big opportunity had come for a sizable rally, but most of them they didn't hang around down here for several days. So if we were to get some choppy action down here today, tomorrow, maybe Wednesday, building a larger area of support, which is, to be seen on the hourly chart, that could open up the door to, what I could perceive at that point being as a decent swing trade for a few days. Right now, I don't see swing trade opportunities for the most part. There's some stocks that are still in uptrends and look pretty good, but they're few and far between. It's not like it was because so much damage was done. So, the throwing the dart and making money time is over. Right. Put side 2750 on SPX. How are they? 2750. Let me drag this down here. Should be a no-brainer, Paul. 2750. You know what? We all have to refrain or stop ourselves from projecting what we think is an impossibility, because that keeps us safe. But for me, looking at that today, I mean, what could happen that could make SPX go down there or below there, right? If we're as a put spread, we get to keep the money as long as it closes above there. So, it's hard for me to imagine the market going down to that level today, which seems like a no-brainer. Clint's looking for 2820, a little bit more aggressive, but still below these swing lows here. That also it does make sense. So we'll see, what the action is at the open. But as I'm, looking around and looking at the futures and how they're trading, I think the trading range scenario seems the most likely, and an put spread expiring today, I think is what I'll say as the easy trade or the easy money, which is nice. So we'll see. We'll see how it all plays out. But right now it does look like that, and futures are moving up here a little bit as I speak. But still just moving up to some resistance there. To the left, you see that little congestion right there before it fell down to that support. So we'll see how it handles that little bit of resistance, or whether it's coming back up to the high. So as far as moving up, again, trading range seems most likely. The upside, as far as today goes, I think will be limited even if it can get above this high. And if it can get back up there, maybe it's a day trade short. I'm not sure right now, but if it can get back up to this level and even a little beyond, of course, that put spread is going to be worth less money, but there's probably still a lot of juice jacked up in there, which is going to make it, I'll use the term, with some reservation, a no-brainer. All right. The Russell futures, like everything else, the only thing that didn't crash through and turn the daily trend down on the markets and ETFs I looked at was solar, which had an incredible run. So it had the greatest amount of room to fall without damaging the chart. So this had a beautiful run there that started at the end of last year. And while it also fell a large amount percentage-wise, it only came down to minor support and the rising 50. So this was the only sector in the 25, 30 different ETFs that we track on a weekly basis as to the trends on the monthly, weekly, and daily timeframes. And on the daily timeframe, didn't violate its uptrend. So this was the winner. With last week with the not as great a loss. Oil bouncing up here a little bit, came back down to that lower support level within the trading range, and so just makes total sense to get a little bounce from there, and that's helping the markets as well. Everything has fallen to the edge of the cliff, so to speak, and buyers stepped up there, that opportunity. And over the next week or so, we'll see how far prices can get above there. So if we look at the Dow, which was the weakest here, you can see how it crashed through this support and basically stopped just short of the void, as we call it, where buyers stepped up here. So ultimately, we got to see that hold because there's nothing to the left. It's either going to have to create support or it's going all the way back down here if this stabilization doesn't create a solid floor at this point, right? And so we'll see how far it can lift off here. Again, historically, it doesn't go that far once it makes the turn. It comes up a bit. I mean, that's what's happened. That's what happened in 2018. And then it came back down to make a new low. And that lower low, where we'll get some divergences and momentum and our internals, is where the big swing opportunity will set up. So I guess the message here is be nimble for the time being. Bonds still rising, but backing off of their highs. We got a little M top going on up here on the 60-minute. It is close to resistance over there to the left. So this, you want to keep an eye on this. This could be as an intraday guide. We know the markets have been fixated on interest rates and what the bond market's doing as yields have plummeted. And so if you want to trade intraday, keeping an eye on TBT or the bond futures to see are futures backing off or TBT is rising, right? They're inverse. That should be supportive of having a long bias, at least intraday, for equities. So a good internal or intermarket piece of information to keep an eye on what's happening with interest rates. Gold is up here, but there was no place to hide last week. Even utilities crashed down. They were 15% or so off of their high. I think they were down about 10% on the week, but 15% from the February low. So everything, and this was doing fantastic, which historically it does. As interest rates are low and moving lower, traders, institutions, retirees, like this is where they want to put their money and collect that dividend. But now their principal, right, has evaporated. Anybody that bought along here is like, okay, whatever dividend you're going to get, you just lost 15% of your money, right? So if you're going to be getting 3 or 4% or whatever, even if it's 5 in this market environment, which is good or maybe great, but you just lost 15% of your principal, that's not a good feeling. So again, the damage was broad-based. Silver came down hard as well. It was underperforming gold, and it couldn't get through that resistance area. And then I guess longs just said, hey, whatever's going on here, let's just get out and see where the smoke clears and regroup. So, what was or potentially had the potential to move up higher because, longer term, this was looking pretty good as it cleared this resistance and could have went up to the next. Well, down it came. So much for all those commercials that they've been touting on TV of late, screaming, oh, silver is going to move up. I guess all of those brokers are now getting a lot of phone calls. By the way, we have a client that works for E-Trade, and he emailed me over the weekend to get some input as to, what's going on. He said that they're all on edge over there because there are so many accounts that their list of people to call to say if there is any more of a little downtick, they're on the phones, they're closing out positions, and everyone is saying, I'm going to sit through this. I'm not going to sell. They're scared, but they don't want to hit the sell buttons. And all of the brokers there, he said, have extremely long lists of people to contact to say, you've got to sell if there's a bit more selling. So, as I've been saying, if these markets can hold here for a few days, they may get some relief as to, those accounts being on the edge. But historically, the pattern is where it dips down here, and it doesn't have to be a big move, but just dipping down will have people projecting, Armageddon, and people will hit the sell button, and we'll see how far that gets. But if there is a relatively quick reversal, when I say quick, breaking down below there in 2 days of stabilization, a nice, reversal kind of a pattern, I think it'll be a tremendous opportunity for, could be a week or two. So, we'll keep an eye on that and see how it unfolds to play out in the coming week. Let's just take a look at, I got some time here, everywhere you look, things were destroyed. Transports getting, crushed. Next support level down there, the Russell, same story. Qs, the only one that held the 200. The others just sliced through it. Whatever buy orders were there, and there always are, is just crushed right through it and went down. So it was a memorable week, to say the least. And one of the comments I made in the newsletter was that for those that are new, you have a tremendous learning opportunity here if you'll focus on learning, right? You maybe think there's a great opportunity as far as making money, and there will be, but just to understand price action in a market like this is, the intraday patterns and how prices bounce off of support and resistance and the things that set up. It's a tremendous opportunity because for the most part, those that are new to the markets haven't experienced anything like this. So take it for that, and maybe spend a little time observing and making notes. All yours, Dan.
All right, good morning, thanks. Yeah, I told Greg over the weekend, I gave the note. We were selling put spreads Friday that we were going to have gap risk. I gave you my opinion that, yeah, the trend of coronavirus is bad. Face it, we're going to be hearing more cases, not less. So that suggested a gap down, but, I I just saw that crazy move into the close with the cooked internals, and I was kind of, I don't care what happened today, we'd be ready. And this pre-market move is actually going to make more difficult our entering new trades. I have a ton of put spread ideas. They're too many to give. I told Greg over the weekend, I wish the market, when we're still open, when I was scanning, I wanted to sell put spreads over the weekend. The premiums are just amazingly big. So this run here pre-market, I wish, well, see, now it's breaking out with a price void. I can't buy after 8 up bars like that. But maybe we'll do put spreads. So every single one of our opens are fine. Everything's a put spread with the exception of VXX. We have long puts in the swing letter, and I put it in under the low as a new call spread candidate. Apple, we had in the letter, and I wish we did get into Microsoft into the close. I wish, I didn't have enough time. This 15-minute rally was just amazing into the close. But Apple looks great. It got an upgrade. Look, wide range bar on volume at these prior lows. I have Amazon put spread in the letter. Look at this, wide range bar, major support. This is a place to do it. So let's just go to gappers now. I'm gapping up a little bit here into this ugly bar. It's one of these Corona stocks. SMH, I like as a put spread. Tesla, look at that, up $39. Oh, wrong one. This also was on my long watch list. You know, took out this prior pivot low, but still, you know, very strong. 707, it's kind of gapping up too big here for now. 709, this, I don't know what it is, but it has the flavor of a Corona stock. This Sedgar I've been watching for a while, recent IPO. You know, it's a sloppy buy setup right here and an uptrend. Gapping up here a couple bucks. I don't even know what they do for a living, but it's holding well. Sedgar. Trill, nice gap and go on Friday after this breakdown failure, but it's gapping up too big now. Twitter's in the news. Hedge fund has, I think, installed 4 people on the board, so they view that as good news, but the gap's too big. WSC, 18 bucks. You know, there's just so many patterns that are climactic buy setups. And then we just got to find the best ones for reward to entry. This one, no interest. We can find better. And this was earnings. I don't know, it might be worth watching. EBIX, there's climactic buy setup. It shows it up 89 cents, but I don't see any prints. But this one's just swimming upstream because it's a nasty crack on the weekly and monthly. Let's see, compare this weekly and monthly to Apple and Amazon. See, so I'd much rather trade these daily reversals on major support on the daily with the weekly and monthly either still in uptrends or on support. So yes, I like Amazon and Apple. We got it in Microsoft, as I said already on Friday. X-ray, see that one's damaged. No interest. EVRG. All right, so here's one. You know, we're still just a counter trend move, but at least the weekly's on major support. I see one print here, 69 bucks. We'll come back to you. Fold. Put spread idea if there is anything, but I'm not interested in swinging that, so I'm going to delete you. GTT. I'll come back to you. You're all over the place. Core, we just, no. Core, there's no price void. Oh, GTT, that was your, we were in that from last week, I think. And it had earnings, which is why we had to sell it. CIR, slight volume, spotty, you're gone. Albo, same. DHC, you're swimming upstream. See the difference in the weekly and monthly compared to that Apple and Amazon I showed you, and even Microsoft. So I have less interest in swimming upstream when against a nasty weekly and monthly too. So I hope you all are seeing this clear distinction. TTD. All right, here's another good one for put spread McGraw. It's gapping up a bit, but quite the relative strength on Friday. Wow, gapped up with the market gapping down, wide range bar. See this weekly and monthly are still strong. And this is a bullish pre-market, so that looks good. This one, oh, it's our spiders. Yeah, this one, we're already in a put spread. Yeah, we're gonna do I'm gonna be adding to it. Oh, another thing I'm gonna be doing today, because I got a bunch of put spreads that expire today. I'm going to be looking to sell my long puts and then just go naked. I mean, even if I get, 20, 30, 40, 50 cents out of the long puts, then I'd rather be naked. So if your account can handle the additional buying power requirement, wow, what a breakout Thursday. Wow. This one's a mess, but wow, big old beautiful breakout. Yeah, David, we have Goldman. Yep, that's a climactic buy setup, major support weekly. Absolutely. That's on the list for put spread. And they were, the weekend they open up the spreads even more. And so I couldn't give an exact I want to see if the spreads are going to tighten up on Goldman. On JD gapping up, but it's a mess. Shop. Yeah, that's a beautiful pre-market 5-minute chart, sure. And that's another example. It's in an uptrend on the weekly and monthly. Yeah, I actually did look at that for a put spread, Clint. And the problem was it was too spready. But yeah, I saw that, yes, over the weekend. Microsoft, our naked puts are going to be doing great. Another example, see, uptrend weekly, monthly. So we're just going to have a field day in these short-term puts. That's another one of these Corona stocks. Kook, you're swimming upstream. APHI, another Corona stock. Intel, it overshot the weekly, but I like that it's on the 200, and I like the semis reversal. We have NVIDIA in as a put spread, and it's up here $6 or so. Disney, but you're still, monthly support. But Disney, they're in the middle of the negative news, having to shut down some of the theme park in China. So, if it can stop going down, Square I like, but it had crazy spreads over the weekend, so I really couldn't tell what it's doing. But the pattern, selling a put spread under these lows, looks like a no-brainer. It's actually selling off here pre-market, which is fine because the entry will be over the high. So our VIX doing fantastic. XOP I have as a put spread over the high, so now it's gapping over the high. Also look at OIH. It's a climactic. I know I'm swimming